everyone, once again, today is 13th of October 2021. Today is a Wednesday. All right. Today's caption: we need more energy to survive. Now, from the behind, now every morning when you see the picture behind the captions, right, you can see that what I'm showing you is inflation prices on groceries, coal, and people water shortage that's going around the whole world. And that's why every morning I take the extra effort to actually create the main impression that I want to share with you for this morning, all right, in terms of the caption. And that is where the direction of today's sharing is. So actually all these, you don't get this picture on its own. You need to really collect the pictures, then you see which the best one, how to mix them, and then do some editing to it to make it nice. All right, it's not that simple, guys. Trust me on that. All right, so every morning itself, I take the extra effort because I value your presence here. All right. Now the thing is this, Lebanon, we talked about it yesterday, and this is getting crazy because the fuel crisis have hiked really incredibly, and people now is having a problem, and they are in fact suffering from food poisoning, business closures, and fuel crisis. Yes, you may say, but that's only one day, right? It's not about one day. It's the prolonged problem that they are having right now, and this is not going to stop. It's going to continue. And the one that really makes people very worried is the coming winter period, right? Another one more month or so, the winter period, the feeling of it coming. And people are very worried right now. And this current summertime itself is already like this. Imagine go to the autumn and winter period, right? Things are going to be very scary. So of course you can also see that globally itself, right? We have a lot of this weather changes. At this morning we supposed to have Hang Seng trading, but apparently the typhoon Kompasu, all right, came in, and it's a number 8. Now, number 8, whenever you see a typhoon is number 8 itself, right, usually the stock market will be closer. So I'm pretty sure that today we will not see any Hang Seng movement until noontime. Then we see whether they subside. Now, if the things subside, it may resume, so it's not confirmed yet. So I'll let you update you as we go along. All right, so before we start this morning, MAO, once again, we need you to understand this. My job is to share things with you. Your job is to make sure you do your risk management. And then whatever I share, please make sure that you really take note of the upside and downside, because I don't want to sell you stuff. Sorry, I don't want to tell you stuff that you got swayed by it, and then after that, if you don't do risk management, then we have a bit of a problem. All right, this is something very, very important. Okay, so if you've accepted the above, disclaimer applied. Can identify me. Okay, every morning I do this. Now I like this joke. I think this is not the first time I use this picture again, but I like this joke. What the hell is going on? Then that is whereby the Mr. Bear and Mr. Bull is talking. Jay and Janet, WJ, are delivering a monster. So obviously this monster that Janet Yellen and just Jerome Powell, they are delivering, in this case itself, is the inflation monster. Okay. Now, why do we want to talk about this monster? Because it's a monster that it will just eat you up, and there is no choice. The worst thing is that you have to accept it, and there's no choice, because there is not. It doesn't come from just supply chain issue. It comes from many sources. Okay, and later on towards the last part of this, before we go to the charting point, there's one particular chart that I want to share with you, and that is the China data. And you will see that the PPI data itself is so incredibly in line with the China's the CPI data. So which means that, right, the core chart and the PPI data, right, has such an interesting correlationship. And if you actually look at that itself, right, you cannot imagine what will happen if really the chart manifests on its own. You mean that if the thing really develops as it is, oh my God, it's going to be very, very scary. I'll show you the chart later, okay? All right, as usual, I will show you this October monthly anticipated earnings for every quarter itself, right? We will show you this thing because we want to tell you that what are the earnings coming up. So today, Wednesday, we have this Levi's. We're going to have Constellation brand. I can already see that clearly. All right, so it's nothing big at the moment, but tomorrow we still have nothing much. This week, as I say, it's only next week, right? That's where all the financial stocks earnings will be out next week, yeah? Okay, so this is just to remind you to take note of all this information. Okay, so once again, I need to little sharing of what I called for yesterday. Now, one number that I keep on reminding you about gold is 1762, right? I keep on reminding you that 1762 is an interesting number that you must take note for this gold, remember? And I told you that, right, the support itself, right, for yesterday was 1755. So let's take a look what happened yesterday. Now, yesterday, the gold actually basically itself was trading above 1755. Okay, it was there, you can see that. And I said that 1762 is a very strong resistance level, which yesterday, again, it broke past 1762, as you can see on the chart right here. It went past it, that's good. But the problem is that after it hit the 1762 level, it did go up higher to about 1766, 67, and then after that, it pulled back down again. Right, 1767 yesterday was a technical level. I believe it was a KTR, a pivot, I can't exactly remember, but it was a level that we mentioned, okay? And of course, it didn't go past it, and it pulled back down. And now you can see right on the chart wise at the moment, it's the first time, second, third, fourth, fifth, okay? The fifth time the market tried to test the MA30 and failed. So now, probably today is going to test again, right? Likely later going to test again. Let's see whether it can eat. This time around could be lucky number 6. If the market test past this figure and stay above, then I'm going to tell you this, I'm going to see bigger upside, that's very sure. But if it fail, then of course it's back to the drawing board again, we'll wait for it to come out again, things like that, okay? So this is what I was spot on yesterday on the gold, not to the point of accurate exactly, but decent enough. Then we talked about Bitcoin yesterday. I mentioned that Bitcoin itself, 56,000 is a good level to consider to book profit. Right? Yesterday, I did say that if the Bitcoin hit 56,000, it's a good level to take profit. And truth be told, you can see yesterday, Bitcoin went to 57,000 first, okay, and then it pulls back all the way to 53,000. Hey, not bad, right? A pretty decent call, means 3,000 point, you know. So some of the students actually went in to short the Bitcoin yesterday. I know that my brother Yao Dong also went to short the Bitcoin too. And of course, it went down all the way to 53,000. But very fast, dramatically, it recovered very fast and go back down to 56,000 again. Why is this ongoing right now? Because there's a lot of funds coming in to buy Bitcoin, because more and more countries are getting involved in Bitcoin. More and more institutions are getting involved in Bitcoin. And don't forget, at the moment now, the Bitcoin availability is only 18 million. And I can say that at least 10 to 15 million are kept in safe boxes somewhere, which means that, right, only about 3 million coins are circulating around. So imagine that 3 million coins, right? Even you multiply the current value. Let me just bring the value in, okay? So let's say we talk about 3 million coin. 3 million coin multiplied by, say, now it's a price of 56,000, okay? All right, it's about 168 this is $billion, okay, running around the world only. That is not a lot of money, right? $168 billion. All right, so it'll be there. So really, you know, if you could put it this way, it's all right. The top 10, 20 billionaire can easily control the market really if they want to do that itself. So that's my point at the moment about this Bitcoin. I still think that if Bitcoin can have any form of drastic fall, right, I think it'll be a lovely time to pick up some coins and look out for the next rally. Because I'm very confident that the next rally will be coming in December, and you could actually see Bitcoin crossing the 70 to even 80,000 level. All right, that's my personal view. So I don't know whether you buy it or not. Okay, all right, thank you. All right, so with that as well, right? Okay, that is what I share with you with Bitcoin and this gold. Okay, now our Hang Seng group itself is basically getting a lot of traction. I told you once again, now this coming Sunday at 9:30 a.m. Singapore time, we're going to have a workshop. Okay, it's only for TWB students only. So which means that public member, you are not allowed to come in. But the thing is this, for the TWB students, okay, if you're going to be at home, okay, watching this with your family members or your relatives, I'm okay with that. That means that you have to be around, you must see your face on the webcam, you have to switch on throughout the whole session. And if around you is your family members or your relatives, okay, I can allow that, okay, I can allow that. All right, so you can see that, right, our students are really doing pretty well. You can see that we may have losses during the day, but end of the day, it's all right. We basically get profits. That is more important. You can see that, right? It's more important. So overall itself, this is posting every single day. Every single day, I update this slide, and every day I can see that students are making money. So it makes a lot of sense that if you want to make money from the market, and now it's pandemic time, and everybody is more at home right now, why don't you consider to trade Hang Seng for a living? because we don't expect a lot of profits, but daily bread. We're talking about a few $100s per day. I think that's very achievable. Really, I'm not kidding you. Okay, consider. All right. All right. Now, yesterday we had the JOLTS jobs opening. Okay, so what happened is that the jobs was actually lower than expectation. Now, it was supposed to be 10.925 million. All right, but it came out slightly lower, and that also another reason why causes the dollar to came down a little bit and the gold went up back then. Okay, a little bit of movement over there. But because it's not a very big data, the market just okay, we accept it, we know what happened, but still okay, relatively within reasonable level. Now today it will be the big day. Now today will be the core CPI data. Now core CPI data is a measurement of the changes in the price of goods and services, excluding food and energy. So it's, I mean, technically one of the very important data to watch out for without all the extra ingredients from energy and food. Now the CPI measure price changes from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. Okay. So in short, a higher than expected reading should be taken as positive, bullish for the dollar, while a lower than expected reading should be taken as negative for the dollar. So in short itself, if let's say the data is higher, let's say the data is higher, okay, let me just bring to you. Let's say the data is 0.5%, let's say 0.5%. Now the forecast is 0.2, let's say the market comes 0.5. So the data will be higher than expected. So what happened? The dollar will go up because it means that inflation is in the picture and there is a higher chance for this interest rate hike to come in. Hence, therefore, the dollar will go up. Now, do note once again for Fundamental 101, when the country hike interest rate is usually they want to prop up the currency, their own currency. So, I'll give you an example. If let's say the US is to hike interest rate, there'll be demand. The demand for dollar will increase. Hence, therefore, the dollar increase in prices. Okay, get a simple idea. So, vice versa. All right. So, if you see a core CPI data is higher, then the dollar is expected to go higher. Then I'm going to go then. And then gold technically will go lower. Okay, gold will technically go lower. So that is how it looks like. You got an idea now? Okay, pretty simple, right? Not too difficult to understand this, right? Okay, so of course, again, what data are we looking at? I'm looking at about 0.5, I'll be honest with you, right? So I don't know whether I'm right or wrong, I'll leave it there. But today, no guessing. Tomorrow, let me guess. Okay, all right. Okay. Now, of course, our Nikkei 27208 lunch winners continue because keep on giving lunches. So Allison had a great lunch and see that beautiful lunch. Then also Wei Xiong also received his lunch. It was delayed by 1 day for Wei Xiong because the driver wasn't there. They really, the last minute, the driver canceled on us. Luckily, next day we get it done. And of course, Fred has beautiful katsu, I think. And then we have Kevin, have his chara shidon, I think, or it's a prawn. And of course, Edmund also had his katsu, I think. All right, the thing is this, guys, you must understand that it's not that we don't want to give it all at the same time. Number one main thing is that Grab only allows 4 outgoing deliveries at the same time. So which means that if the 4 drivers are all being utilized, right, then the rest, I mean, the app cannot continue to call. Okay, that's the first thing. Number 2 is more important is that, right, sometimes the drivers start, right, there are so many orders, they cannot take it, okay? And some restaurant is overwhelmed with orders because we only choose the better one for you guys. Hence, therefore, that created another problem. And the last one is because sometimes due to the delay of communication, sometimes the drivers goes to your home, but they couldn't find you and they left. So apparently one of the driver actually left with the food, okay, without giving the food to us. Oh my goodness. So all I can say is this, all these because Susan did a great job. Susan basically itself is so adamant to make sure the food is being delivered to you guys. Hence, therefore, she will still do it by making sure that you get your food. So guys, those who have winners of this, please help me, do me a little favor, thank her. All right, she got a bit of stick from me because I wanted her to do it in a very easier way, but she said that no, Cal, I want to do it this way, and yeah, she did it. So Susan, again, fantastic. So let's just give her a round of applause here. It's all right for Susan, okay? Even though you may not be one of the lunch winners, but I'm sure she is a darling and you guys should appreciate her. Okay? All right. Thank you very much, everybody. Okay. All right. So with that itself, right, we will continue. And of course, last night, the Dow Jones was pretty flat. It was almost to the point of non-existent in the whole entire day. It's like, oh, the market is ding dong, ding dong, ding dong, ding dong. Now, don't you realize that we have been past stamp one payroll? We have already come to today, Tuesday. The market is still undecided, okay, pretty undecided. But there's a very important pattern that you must take note itself. There's a very, very important pattern you must take note. It seems that, right, the US market has a tendency to likely take profit towards the second half of the day. So which means that about 2 p.m. or 2 a.m. Singapore time itself, right, there will be some profit taking. And actually, that's not a very good sign. If a market is actually bullish, right, usually the second half of the day, it will climb up and close near the high. But if let's say that it's the other way around, usually in my perspective itself, right, it's actually a bit of bearishness. So that is the reason why I am not that keen to buy too heavy onto the US equity market. So let's take a look what happened last night. The Dow Jones falls for the third straight day as investors wait for the inflation data and banks earning. Now the banks earning next week, so that means this is buying, selling ahead of time. I'm not too sure. But definitely for sure itself, right, you can see that the index traded near the flat line for much of Tuesday's session before selling pick up towards the close. All right. So basically, that is why I'm saying that I'm a bit of concern with this factor here. Now, we do know that, right, we have today the CPI data, we will have the retail sales, the FOMC tonight minutes too, and of course, the start of third quarter earning results. So all these itself, right, is going to weigh into the market. And of course, IMF just came in, they thought an article on that, says that, right, they have to prepare to tighten now. IMF also came in to chip in some money during the pandemic time. So if IMF also decided to, hey, it's time to tighten a little bit, right, then of course, globally itself, right, the market will follow through. And because of that, you can see that the job opening very interestingly dropped by 600,000 jobs, okay? So we were expecting more, but apparently it's not. So again, this shows that the last Friday non-farm payroll maybe is really a reflection of what is happening right now in the market. Now, FYI, very important is this, most of the analysts are looking at the S&P to close. Right, the Hang Seng is open. Oh, okay, is it? Oh, I didn't know that. Oh, okay, the Hang Seng is really open, the futures side. That's interesting. Maybe the spot market is closed, I mean. Okay, I understand. And the spread is pretty big, 25 points. You can see for the AIMS platform here at the moment now. Okay, got you. Thanks, King Hua, for sharing with us. Yeah, just give me a moment. I just share my friends too regarding about this. Okay, continue. Okay, all right. So the thing is that most of the analysts are all looking at, this S&P to be at about 4,400 level, 4,433 to be precise. So now we are at lower number. Now we are now at this figure here. Let's take a look at it. Now we are at 4350. So there is a little bit off right now. That means that currently now the market is trading below the analyst year-end target. So that really tells you that a bit of bearishness are ongoing now in the market. Okay, a bit of bearishness going on in the market. Okay. Okay, so that is the recap of yesterday. Let's look at the review, okay, of yesterday's market. Now, yesterday, the Dow Jones was, I told you, kind of flat in the whole entire day because the KSI was green in color, so the market is expected to go higher. But the problem is that after that, towards the second half, the market came down, all right? It did try to test pivot 2, but because the KSI is green, right, so usually we know that it will not close near the low. Okay, there's a trip of Wi-Fi. Okay, all right. Okay, so whenever I see a BNB and a color change and they trigger something like a KTRs or the pivot or the OP, the OP, right, it's always a trade. So this is where you can take a sell position. And that was where the market did came down. But once it hit pivot 2, you notice that once it hit there, it stopped there and created a CCRY after that itself. It worked a little bit, not a lot, but still decent. Then after that, it came back down again, and this time around it goes below pivot 2. So we thought that the market is going to go down at this junction. But when we look this at the KSI, right, you notice that the market is coming down, but the KSI is staying green. Now, this is a very, very important factor that you must take note once again, is that the KSI is not a price indicator. So you notice that the price came down, right? And it's not like 1 bar, 2 bar, it's like at least 6 bars down, yet the KSI stay green. Now, this is a very important divergence that you must take note. I repeat myself. Look at it. The price came down, right? Okay, traditional indicators sure will point downwards. Whether it's stochastics or RSI, MACD, all will point down. This one is definitely for sure. But you notice that my KSI actually stayed green. So these, again, very clearly tell you KSI got nothing to do with price action. So why the KSI is green? It tells you that the boys are absorbing it itself and they're buying. And of course, the moment they flip over a color change, CCRY, bang, that was where the buying came in. And of course, we saw the Dow Jones shooting up all the way to as high as almost KTR +1. So again, this tells you so important about you need to understand how to trade the market. And because the KSI is green on the day chart, right? Remember, hence therefore, whenever the market comes down to KTR -1 and then rebound, right? That is a very good time to buy also. Remember that? Yeah. So that's the reason why yesterday, that's why I was advocating for the buy side, even though I'm bearish in the market, but I still say that if the market rebound, P2 is a buy. And I believe Susan also mentioned that herself. And of course, we bought, and some of the students here made money, right? Remember, some made about $100 to $200. And of course, one particular student actually made $10,000 yesterday. Oh my goodness. So what happened is that he shorted, then after he went long. Wow, really very good execution. Shorted and went long. So that is how you should be using the TWB system to your advantage. You know, that is how the right way to make money. Okay, got the idea? Yeah. Okay, good. All right, let's continue, and we see the gold market. Now, gold, kindly take note, gold today is a CCRY with a interesting momentum. Okay, let me explain this to you. First of all, yesterday the gold opening price is here. Okay, opening price is here. The KSI is green in color. All right, so why can I share with you, right? The KSI green, if the market stays up, it's a buy. So that's why we concentrate on buy yesterday. And then after that, if the market break P1, of course, above OP, above P1 is definitely a buy. Just that is a very strong, I know why, this one, the 1767 is a TSCB level. And that's why the market hit the 1767, couldn't stay up and then come back down. Okay, so 1767 is the invisible TSCB level. Now let's look at the intraday chart, shall we? Now, intraday chart, same thing again. The BMB started the movement here. The BMB followed by CCRY is a buy already. So that's the first sign of buying. Then, of course, when the market stays above the OP and pivot 1, it's even a stronger buy. So that's the reason why, again, if you know your technique well, above OP, above pivot 1 is always a buy, no matter what you tell me. All right. So of course, what happened? The market did a BMB at the top level, a CCYR kicked in and KTR +1. So ideally, you can short the market, but you remember the KSI is already green in color and the pivot 1 is already there. So you can see the gold actually stopped there for a while, almost for about an hour. And then after that, straight away, CCRY kicked back in again. CCRY above OP, above pivot 1, it's a buy. So gold again showed up. So you can see that throughout the entire day, as long as you stick to the one simple rule, above OP, above pivot 1, just stick to buy, right? You more or less make money in the market. All right, pretty cool, right? You just have to follow one simple guideline and you just trade throughout the whole day. As long as the market doesn't hit a stop loss level, you will be able to make money. Pretty cool? All right, if you think that this is pretty cool, can you press cool over here? All right, if you think that this is a very cool explanation of how the gold should work, and of course, our system really worked according to plan, and think that, hey, not bad, right? This system, please key the word cool, all right, from me. Thank you. All right, thank you very much, guys. Okay, water. Okay, all right, let's continue. Okay, let's look at some local and global news right now. Of course, in Singapore, COVID cases, we are still at the very high, near the 3,000 level mark. So yesterday, unfortunately, 11 people actually passed on due to the COVID-19 virus. But incredibly, you must take note that out of the 5 men, 6 women that passed on, 3 were unvaccinated, 6 were partially vaccinated, and 2 were vaccinated. Oh my God. Okay, so it shows that, right, those who have underlying medical condition apparently are the one that pass on. So it shows that, right, it's the virus. It's like breaking down your immune system, and then of course, if you have some underlying medical health problem like that, it will trigger everything. And of course, unfortunately, now we have 183 deaths. That is pretty sad. But like I say again, the good part is that, right, okay, the numbers are now seemingly kept below 3,000, but the community cases really at a high level of 2,700. Now think about this, Singapore is a population of only 6.4 million people. And if let's say on average every day, the community has about 3,000 people, right, getting this virus, actually it's kind of bad, right? So that is the reason why we need to be very careful. And even though you go for some medical center itself, you must be very careful, because like this one, United Medical Care Center in Toa Payoh, the total number of cases, 99 of them. Wow, okay. So that again tells you, and the staff, some of them will hit, okay? The staff will hit. So I'm sure they are all vaccinated, right? So, all right. So by the way, FYI, about 465,000 people have already received their COVID-19 booster shot. Hey, that's quite a lot, no? Pretty surprising, huh? And about 127 have booked for their appointment. Okay, so really, those who can qualify for the booster shot, maybe it's time to go for it. All right, you don't want to take the risk anyway. Okay, all right. Then you can see that this is our minister, Mr. Ong Yi Kang. He says that he feels anxious on Tuesday because when cases detected on Monday will be reported, it spiked, because normally over weekend they don't really give the data is not that, it's always low because they don't have full reporting. Then after that, because on Monday then the cases added on, right, usually there'll be a spike, but apparently for some reason it didn't, so it's kind of like, whew, okay, but okay lah. All I can tell is, Mr. Ong, I just hope that you don't get too happy too early, because every time you say something like this, something opposite will just happen. Let's hope, finger crossed. Okay, finger really, really crossed. Now, lawmakers slam UK COVID response, right? Say that the herd immunity strategy is a public health failure. So apparently it's all right. It's a bit of like, okay, familiar. Okay, because it says that, right, the inquiry says that the delay in establishing an adequate test, then the delay of comprehensive lockdown, not given sufficient priority, and the forward planning of agility wasn't there. All these is all constitute to why the UK health problem is so terrible. I think same thing over here, right? Okay, all right, we need to practice our comprehensive lockdown. We need it, but we got no choice. We need to survive. We are already a small little country. So you look at UK, even though the numbers are consistent right now, but it's still not a good figure. They're talking about 36,000 cases per day. Oh my goodness. Singapore at 3,000, we're already like, oh, okay. Imagine your country itself from July, 3 months ago until today, every single day is 36,000 cases. Oh my goodness. I cannot imagine how crazy can it be. All right. So that's why, once again, all I can say is this: we have to really be thankful for our government who's still doing their best to help us. And for our side itself, right, we just have to make sure that we take care of ourselves. This is social responsibility. Now, the thing is that the energy market is the one that I'm very concerned, because now China isn't the only huge Asian economy that's a coal shortage. Now, coal shortage is going around the whole world. And of course, we know that the bigger country that needs that is not only China, India also. Now, India itself, right, 80% of India, 135 coal-powered plants has less than 8 days of supply. Oh my goodness, less than 8 days of supply. This is really very scary, because imagine that they are one of the largest importer, and yet they should have reserve. But apparently it's all right, the widening gap of the soaring international coal prices and the domestic coal prices really, open up. And when it open up so widely, it's all right, it will cause the problem. And of course, when supply drop, demand increases. That's a headache part. Now the thing is this is going to be a big one, and of course, the India Power Minister, Mr. Raj Kumar Singh, says that, right, it will last as long as 6 months. And of course, with the festive season, the Diwali is coming in. definitely itself, right, the consumption will go up and people will want more. And obviously, if the economy is recovering from the pandemic, the demand will go up higher. So now it's become like a problem again. So now, even though the economy is doing well, but because of the coal, the energy is not available, it will dampen again the entire supply chain. And this is again a problem. Now, why is that so? Because of all the supply chain issue. And that's where I uncover a lot on these important market references. Now, you must understand the sharp surge in energy prices will definitely threaten economic recovery. And it's really slowing down some of the growth. I give you an example now, right? With the perfect storm, okay, of energy shortage and high demand has made the outlook uncertainty. Because now we have a higher demand because the economy is opening up again, but the people is not there. Because number one is all people who are sick from, is being hit by COVID, they are sick, okay, that's number one. Number two, during COVID time, many mine company goes down because they couldn't survive. And because there's no manpower, the company couldn't survive on thin line itself, they collapse. So now the problem is that even the economy wants it now, they want the coal, they want the energy, but because of these mines are all down or no more involvement, it becomes a problem. It becomes a problem because no one wants to go back there to work. So all this is going to be a problem. Now become like, okay, I want it, but I don't have it. So the only way to if I want it, but don't have it, the only way is to bring the price higher. You can only attract the supply when the price goes up. So you can see now the crude oil prices, right? You can see from $20, it shoot up all the way to $80 in just 2 years. We are talking about, seriously, my friends, we're talking about $20 last year and this year $80. We're talking about, how many percent is that? We're talking about this 400% increment in a short time of 24 months or lesser. Now, the last time we see something of such phenomenal is somewhere around here at $60. It went up all the way to $140, and back is there 2008. That was what happened. And of course, if you look back into history, it has proven whenever there's easy monetary policy involvement, a lot of money is pumped into the system, the dollar depreciates in value, the interest rate level is low, you always will see an inflation uptick. And truth be told, commodities will follow through. So what we are seeing right now is seemingly like a deja vu effect, right? It seemingly is happening again. So of course, some traders say, okay, look, you put a high to the high and you connect it down and say, all right, we're going to have this. This is the real reason, a technical breakout. Okay, if you tell me it's a technical breakout itself, right, then it's very clear it's a technical breakout. So which means that crude oil has to go higher. And in order to go higher itself, right, do you know that that means that by technical analysis, crude oil may have to go to $110 just to probably fulfill the technical analysis. And number two, the demand for it. But do you know what's the cost to it itself? Oh my goodness, I didn't know about it until I read it up. Oh my God, according to this guy, Zandi, he says that every penny increase in the cost of gasoline or gallon of gas, is about $1 billion. So in short itself, when $1 rise in the price of gallon of gas, okay, the cost to the economy is $100 billion. Wow. So that every time this thing go up by $1 itself, the economy will lose 100 billion. Oh my goodness. Okay, so imagine that if let's say the gas went up to 5.25, that's 200 billion. That's a percentage of GDP. If you keep on going up itself, right, the rest will go up, right? Everything will go up. When gas prices go up, everything will go up because they will put the cost to everybody down the road, supply chain itself. So that's why we are in a very catch-22 position again. We want the economy to recover, but we don't have the facility to do it. And this market itself, right, it's not going to be nice to you. They're going to go for it. So that's the reason why, again, we are having a bit of problem right now. We have this problem whereby we want it, but we cannot afford it. Yeah, we want it, but we cannot afford it. So that is another big issue for the current situation right now. Okay, so you got an idea? Yeah, you see, only all this can get from MAO. So because I really take a lot of effort to read through everything and get back to you. Of course, I can tell you a lot more stuff, but you don't have to keep the one MAO within 1 hour plus. Okay. Now, inflation gauge should be hot again in September and the months ahead. So today we have the core consumer CPI data, right? So that's something we watch out for. Now, the main thing is this. The problem is that if let's say productivity is not able to come in, inflation goes up itself, we will hit this thing called stagflation. That means that the economy is not recovering fast enough versus the inflation. And with that happening, that will create growth expectation to fall and deceleration to begin. So that's why now, right, you must understand that the market is actually getting very worried of the energy prices, and there's seemingly no stopping here. And of course, we're going to enter cold winter period. And we all know that during winter period, gradually, we all know that usually crude oil price will go higher. Let me just bring to you one chart here to just show it to you, okay? Not say 100% you'll be like this, but majority of time it is like this. Okay, let's bring up the chart now. Okay, just give me a moment. Okay. Here we go. Okay, let's just look at it in the form of the a monthly form. Okay, monthly. Okay, let's take a look at the last few years. Okay, now you just have to focus on the last 3 months of the year. Okay, last 3 months of the year. So this is the start of every year, right? Can you see that? Okay, this is the start of every year. Okay, so you take a look here. Okay, I'm just gonna put all the circling for you. Sorry, no time to do the PowerPoint. Okay. Now, basically, the start of the year itself, okay, this one in June, the price of crude oil goes down, okay? But then this is the price of the 2106 go down. That was during the time of 2016. But you look carefully, 2017, when the economy is recovering, the crude oil is actually started to move higher. And of course, it happens again, and it happened again, okay? This one, it went up first, then it came back down over here. Then after in 2020, it went up first, okay, before it stepped down due to the, due to the pandemic. All right, so overall itself, right, okay, you can look at it. There are times whereby the market do pull back towards the end of the year, but majority of the time, when the start of the year come in, you can see that the start of the year, the crude oil price actually goes up. That means that when the start of the year comes in, right, usually the crude oil price will actually move up a lot, okay? So what I'm trying to explain to you here is that, right, because winter period is not only like December, it's actually from December to from November around to February period. So that's why if the market is to look at it in general perspective itself, right, we're going to see more higher prices. Okay, we're going to see higher prices, and I'm going to be very clear here itself. I believe that we will see about $110. Yes, I'm not kidding you. I believe that crude oil price may have to go to $110 by probably March 2022. Okay, this is my personal target. All right, why is that so? Because of the inflation, because of the lack of supply, and most important, I believe that the dollar will depreciate further in value. Okay, that's my personal take. Even though I say that there's tapering, there could be interest rate hike, which I don't think will happen. Okay, in my opinion. Okay, all right. Okay, so the thing is that because now IMF is also warning, that, hey, you know what, we have to be very careful. We may have to consider preparing the tighten policy to make sure that inflation don't get out of control. Now, IMF, you know, is a big entity, and if they were to say that itself, that is seriously how bad it is. So in terms of in US now, inflation is at 30 years high, and of course, the Federal Reserve had to wrestle between what to do now. And of course, for IMF, they are saying that, right, they can allow it to happen, but that was in 2020, but that was 1 year ago. 1 year later now, they say that I think we need to really relook at this, and let's look and how to get this done. So again, if even IMF is looking at this as inflation, that means it's just a matter of time. A lot of things will have to continue by tapering, all right? And of course, this federal guy, Bullard, says that the bond purchases should be tapered quickly in case the rate hike are needed. Oh my goodness. Okay, now this guy is obviously been known to be very aggressive. He says that it should be time to quickly now wind down the monthly bond buying. So imagine this, the stock market and the bond buying is actually intertwined each other, right? So imagine that the bond buying really sees what will happen to the equity market. It's pretty clear that the equity market will drop. You get my point. So it all depends on how long this Federal Reserve is going to kick the can down the alley. If they're going to just say, okay, November, we're going to do this, the stock market will definitely behave in that manner, okay? But of course, he's very optimistic still. He made himself very nice. He said that, okay, but because of all this itself, right, the next year, the growth will be fantastic. So he says that, right, he support tapering in November. That means that he wants Federal Reserve to immediately do that by November. And he says that, right, but then again, it will create a very good economy next year. So now at the moment now, right, we know that Federal Reserve is putting in $120 billion of monthly asset purchase. And of course, we have a target to end it by 2022. So if we're looking at this, is about $15 billion reduction every month itself, right? Okay, so he's like looking at faster, like maybe 30 billion and stuff. Now, if the Federal Reserve really do that, I believe they're going to do 15 billion. I don't think they will do 30 billion at one shot. I don't think so. I think they do 15 billion. So what happened is that the market like, okay, yeah, you're doing, but you're still pumping money, right? So that's the idea that the market wants to feel. Okay, so he mentioned that a supply shock alone can't cause inflation. A supply shock being accommodated by easy monetary policy. So that is a real reason. And he felt that, right, the US economy now is a very good place. He doesn't see that with 1970 style stagflation or inflation with negative growth. To him is that now the chance of a recession is exceptionally low at this point. Oh, okay. So he covered his tracks very well. He said that, okay, I want it to be taper, but I don't think the economy is going to collapse. So that's the reason why, you know, it's very official. Okay, Santoli. Now, Santoli basically covered a few charts today. I'll show this with you. Now, basically, his point is that this is the S&P cash market. We can see that 1 year to year itself, okay, the market seemingly interesting on 2nd September, the market pullback, okay, as if that it's like a clock like that. Okay, now the thing what I explained to you is that if you put the moving averages like 50-day, 100-day, and 20-day moving average, you will notice that the last time when the market hit the moving average 100, right, it actually rebounded. Okay, hit the moving average. Okay, moving average 100, sorry, 100, it will rebound. So now the thing is that it's seemingly trying to behave the same way, seemingly. Okay, so the thing is this: are we too near, or are we going to see a collapse? So I'm going to give my personal bet is that it should have a bit of recovery. But another wave down itself, right, may change the whole thing really. So that is whereby my personal take over here. So this is the break-even inflation rate percentage according to his chart. And of course, now we're talking about the last 10 years. We are now at the highest level. Oh my goodness. You see that we are now much higher as compared to 10 years ago. So of course, you may say, arguably, 10 years ago, the population is not as much as today. True, all right, but still, if it's going to be a reflection of charts, you can see that, hey, you know what, there's something here that we need to be careful, right? So the market breadth of last night was actually pretty okay, 60% on the upside, even though the Dow was coming up. So overall itself is okay, but this VIX, all right, now yesterday I did share with you all VIX. I think that for protection basis, I really think that VIX at the moment now at 19 to 20 is a very good price to buy, in my opinion. I think so. So you can consider that. So let me just show you some of the charts before we go into our charting. All right. Now, first of all, this is the US Treasury yields, 10 years bonds. The yield actually came down yesterday. Yes, indeed. The yield actually came off yesterday. It loses to 1.6%. So the thing is this, when the market went up over 1.6%, the stock market pulled back. Now the yield pulled back, the stock market also came off. So you can see that that shows you that the weakness in the stock market. So the first thing that I need to take note now, but because you can see it's a very strong positioning here. Now the RSI reading shows that the high to high got higher, so which means that a good pullback is expected, a decent pullback is expected on technical ground, but likely won't stay long. The next trip will be 1.7 already. I believe that the next trip will be 1.7, and I believe it will happen before end of this year itself. So this is something that you must understand. Again, a pullback like this is definitely doesn't mean that it's going to go down. Most likely going to go up higher later on. Okay, then this is the US dollar index. Now the dollar actually climbs, interestingly. The yields came off and the dollar climbs. Okay, that's something interesting. So that's the reason why yesterday the gold price also couldn't go higher, because the dollar actually increased in price. The question is that why the dollar is increasing, because I say the chance that tapering is going to happen soon created this. So the more tapering going to happen means that the reduction of dollar supply, hence that's why the demand for dollar is there. So that's the reason why I tell you that if you're going to buy the dollar, you can buy back then at 92, 93, you can keep on buying. At the moment now, it's just too late to buy dollar. No, I still think the dollar will go higher. It may go to 95, 96 level. Yeah. I believe that the dollar will go to 95 to 96 level by maybe March 2021, 2022. I believe that will happen. And when that really happens itself, right, doesn't mean the gold will go down, because if the inflation is going to be one driving the dollar higher, right, then of course the gold will also be bought up at the same time, even though logically it shouldn't work this way, but it is possible. All right, it is really possible. So don't just take one side of the coin. You need to take both sides. And of course the VIX part, you can see now why am I looking to buy the VIX. Okay, now because the VIX itself, right, is now holding very strongly at about 18 to 20 level, and I really think that, right, you should protect yourself in case the tapering really comes in. I believe that the tapering will come in, and I believe that that will propel the stock market, sorry, it will bring the stock market lower, and that will bring the VIX higher. So I'm very, very bullish on this VIX itself, very bullish. And of course, you can see that every time when the VIX comes down and hit the 50 range on the RSI, you can see that usually it will rebound. So with all these tapering coming in, potential tapering coming in, CPI data and stuff like that, I think that for protection basis, you should buy. So I'm going to give a very strong buy here. So I think that you should buy at about 19 to 20 level. And then after that, right, expect to go about 25 to 26 level. Okay, got it? All right, so maybe let's check how many of you are going to buy the VIX. You're going to buy the VIX, can key the word VIX me. Okay, that means that I want you to tell me if you're going to buy the VIX. Now you can buy it through AIMS. All right, they have it and it's pretty decent. Okay, I will just show you a simple later in any other group, right? I'll show you if you buy VIX how much it costs and stuff like that. Yeah, I think that VIX is a very good protection tool. You should consider doing that as well. Okay, all right. So that is VIX. So anyone going to buy VIX later? If you want to buy VIX, let me know. All right, just hit the word VIX me. All right. Okay, by the way itself, gold price is actually moving higher, and today is a CCRY on the day chart. So those in the 3G group or SNG group and the gold group itself, right? Or if you are involved in gold, consider looking at that. All right, so Susan, if you're listening to me right now, can you just text to the gold group chat and inform them that day chart itself is a CCRY. This morning I was busy with MAO. I didn't have time to update the groups, but you all should know that it's a CCRY today. Okay, all right. Okay, thank you. All right. So let us do that. Okay. Now this is the chart that I want you guys to really, really take a look. This is really pretty scary. Now this is actually the China coal futures versus the PPI data. Okay. All right. Let me just keep us to the people down there in the group chat first. Gold today is a CCRY on the day. Traders. Ooh. Now, what do you see, guys? What's your opinion right now? You see that from 2014, okay, 2014, whenever the China coal prices go up, the one in red, China coal prices go up, right? The blue one in blue, sorry, the one in blue is China coal, sorry, yeah. When the China coal prices is going up, right, you notice that the China PPI also follow through. So when the coal prices goes down, you can see that the PPI also follow. So the question now is this: they are so intertwined to each other, but today now the China coal futures is shooting up like this. So what do you think will happen to the China PPI data? This is the real very scary part itself, really very scary. So imagine if the China PPI is a follow through, that means that will push the inflation strongly into the market, and this will actually, it may stimulate some sector, but it's going to hurt a lot more sector. And that's the reason why I say this: we are now in a very dangerous position now. In short, Beijing is now trapped. If they eases their current situation, inflation itself was going to soar higher, right? Okay, and that will create more downside for the economy. If it doesn't ease, the property prices now, as we know, due to Evergrande, is imploding, will create the. So now that is a problem here. Ease or don't ease. Know that in a checkmate position. Exactly. In fact, other than, because China have Evergrande, but you look at America, they also have this problem. They ease also cannot. They don't ease also cannot. And I said that 6 months ago. I tell you that, right? They'll find themselves in the corner, and they will be in a checkmate position. They have to wish for the best already. And of course, the market known as the most bullish or the fattest market, I would say that is really, untapped itself, the one and only stock market. So if they really want to, do themselves a favor, right? What they can do is to really tap on the stock market to bring down the whole entire movement downwards. Of course, you will like, oh my goodness, they're going to like tear down all the hard work. But if you really have to survive, you have to survive. So that's why I kind of believe that, right, we could see something pretty drastic, right, along the way, if they say they really have no other choice. Okay. All right. So that is the data here. Now I want to show you this one is the one I told you I'll update you. All right. So every day is I'll update you the fear and greed index. Now yesterday was 32. Today it's only 31. Okay, so it's not a lot of movement. So I told you when we hit 11 to 12, we will definitely be looking to buy. And of course, I purposely put this update you to let you know that, right, how the Goldman Sachs and JP Morgan are looking versus how the Morgan Stanley are looking. So again, you must understand that they can come from the same school, they can come from the same university, or they may work before with some other people, but at the end of the day, it's not right. Same thing on the hand of a person can be viewed differently from another person. So that's the reason why I want you to know that, right, there's no 100% in everything. Whatever you look from, you hear on mainstream media, you have to do your own risk assessment. Okay? All right. Okay, so I've covered all that itself. Then let's just look at the charts. The bull goes moo, the bear goes grr, and the lemming go, it's different this time. Let's go for the chart now. Okay, let's go. Okay. Yeah, just give me a moment. I'll do something here itself. Just give me a second, okay, guys. Okay, I think Susan helped me updated the group chat already. Okay, good. Okay. Okay, all right, let's take a look at the market. Okay, now first of all, let's look at China. Okay, now China market today is really flat. Wow, really flat because Hong Kong is also not around in a way. Okay, let's take a look. Okay, first of all, let's just bring in the MLP first. Okay, one. Now the MLP for today is somewhere around here for the China A50. Now the market have traded the 50% mark Fibonacci but failed. So it kind of like fizzled off. But as you can see, the market is now way above the MA30 level. At the moment now, for this market here, we make it smaller a little bit. Let's take a look in the whole front, okay? So the market, you can see now from the highest point, the recent low, you can see that, right, the market has seemingly bottomed out from here, from the MA30 level. But if you actually look at it in a closer level, this is the high of the RSI, the 30, last one, and now. Okay, so this is A, this is B, and this is C. Now look at it again, A is here, okay, A1 and A is here, B1 and B is here, and of course C at the moment now. So you can see that A1 to B1 is lower than A1, and now theoretically speaking, C1 is lower than B1. So all these tells you that if the market is still downtrend, it's there. The only thing is that on the flat note here itself, the market has seemingly bottomed out a little bit around 14,523, and this bottom has been done across 2 months. So my take is this, okay, that if the Chinese government can come up with some stimulation package to save Evergrande and the entire property market, we could see it going up higher, okay, we could see it going up much higher. Now, if the market fail, all right, and if fail, then the market may have to test all the way down to this point here to create another, make a triple bottom, or for triple bottom, or it to really bottom out. Now, with the China government going to have the 20大 coming in, right, I believe that the downside pressure is going to be very little. Unless really something very bad happen in China, like Evergrande problem, the coal mine problem, and all these things come together at the same time, then maybe the market may pull back down. But if not itself, right, my personal take is this: the Chinese market may be going up a bit more, in my personal opinion on this. Okay, yeah, okay, so that's China. Hong Kong is closed today, but I know that the Hong Kong futures is open, but it's going to be, the spread is pretty big, I heard, and likely it's not going to move much. And truth be told, yeah, it's not moving much at all, very flat. So this is not the best way to do any charting here, so we're gonna leave it alone. Okay, not today. I'm saying today we won't talk about this much. Okay, so don't trade. Okay, let's look at the US market now. US. Now, US market actually is not a very comforting sign. Okay, it's not a very comforting thingy, because why? Let's just go through it objectively once again. Okay, now first of all, it's below the MA 30. Okay, and if you look at it now, yesterday it closes below the MA 200. So it's below MA 30 and below MA 200 at the same time. So it's not very nice. And the thing is this, you notice that today, the high of today and the MA 200 seemingly coincide. So it seems that the boys do know the existence of this. And actually it's not a very nice, it's not a good sign, I'll put it this way. So all I can say is this to all the traders here. Give me a minute. Okay, so all the traders here, I want you to just take note of this very important key point here, is that today's the MA 200 is actually calling at 34,380. So which means that the Dow Jones will really need to go past 34,380 for it to go higher. Now, the MA 30 is even more important. The MA 30 is 34,460. Okay, now that means this number very close by. Okay, I'm going to give a call right here. If the Dow can recover above 34,380, we may see going up to 34,460. Now, most likely it may be going there when the European market comes in. But once it happens itself, that the market cannot stay above it, if it cannot stay above it, right, I kind of suspect that the selling will come back down again. The selling will come back down again. And if the selling come down again, that will be the second time it go below the MA 200, right? Now, if you notice this, every time when the market basically goes down, MA 200, usually it will rebound, right? Usually it will rebound. But you can see that the thing is this, the last time we saw something like this, it went down first, it rebounded, went down again, rebounded. Take a few rounds before it actually goes up. So that means this MA 200 is a very important technical level that you cannot ignore it. So as long as the market cannot break above 34,380 today, right, the market might be heavily resisted. And if it's heavily resisted, right, it may bring the Dow really back down to this point, the 95% mark, which is 33,835. Okay, so watch out for this figure. 34,380 is the first level the Dow has to cross today. It's very important, 34,380. Yeah. So this level has to cross today. Now, if you're going to be any short sellers, you want to look at about 460 to 380 level. For people who buy and sell, right, can I suggest that you're going to buy, then you make sure that you buy also around here, and then you aim at 380 to 460 to take profit. Okay, that's my view on the Dow Jones. Take note of that. Clear? Yeah. Okay, so weekly chart. Now, weekly chart, I already tell you, not very comforting. Look at it. And it has break the long-term trend line, and of course, it's seemingly now looking to like engulfing the white candle. Now, this is not a very good sign. So that's why, again, I want to express my point is this. For 4 weeks already, the data, we know that is happening, and now we have tapering coming in, and the market reacted by the way. So you know that every month end, there will be still the 120 billion coming in. That's why the market cannot close at the lower end. All right, it doesn't close. So it shows that every time itself that we all know that the funds came in to buy. But the thing is that the longitude movement now doesn't seem to be very optimistic. So traders, right, I would say that, right, go higher, short will be a better idea. Long, you have to wait for it to go much lower for it to buy to be safer. Okay. All right, so let's look at today's Dow Jones. Now, today's Dow Jones, you can see on the chart, is really kind of flat this morning. This open today. Okay, the opening price is between the two pivots. The KSI retained as green in color. So which means that if the Dow Jones go up, right, it should be able to go up to 34,401. Okay, 34,401, somewhere near the level I mentioned earlier itself. So I suspect that the Dow could be resisted today at 34,401, which means that if the Dow will go up, right, it will go up, and then if it couldn't, it will come down. Now, do note again, today the Dow is a CCYR, yellow to red, but the KSI is green. So the rule calls for buy, the KSI calls for buy, but the technique here itself calls for sell. But the sell can only be, engaged only when the market goes below OP lah. So as long as the Dow stays above OP, right, I think it's all right. Okay, the CCYR shouldn't come in. But if the market later on goes below OP, then we have a bit of problem, and the market may go down all the way to 34,040. So it is possible. So traders, you just need to take note of that. And the cage itself is very big. You can see the cage is very big cage. So the market is going to be like sideways ding dong for a bit. All right. So my personal suggestion is this: if you are long in the market right now, no wrong. Just that when you hit 34,401, consider to take some profit. I repeat, when the Dow hit 34,401, do consider take some profit. Okay, very important. All right, cool. All right, understand that. Okay, all right, continue. So let's look at the Nasdaq, shall we? Now the Nasdaq is rebounding. The Nasdaq rebounding from the low this morning. Now the Nasdaq MLP will be here, and we can see very beautifully it got resisted already. And also, you notice this, everybody, look at it. The 95% mark today and the MA30 is the same. Wow, the same. So what does it tell me? Now, it's like a law of attraction. If the market can recover, it may go towards this point. But of course, this is like pretty far away, 14,932. So it's quite far away from current price now at 300 points. And I can be safely tell you that, right, I don't think any of the tech shares will be having the strength to push toward that level near term. So all I can say is that the target can be placed there. The probability is kind of low though. Okay, now the MA200, this is the one number that I want you to think of. The MA200 is 14,523. Now this number here itself, right, if you notice this, the last 3 times, when the market hit the MA200, it rebounded. So I also tell myself that if the Nasdaq do come down to 14,523 and below, and then stage a rebound, right, it's a very good time to buy the Nasdaq. Okay, so the thing is this: if you're going to short the Nasdaq, then you can aim at 14,523 because it seems like a magnet to pull it down. But on the flip note itself, right, once you hit there, you must remember that you cannot, whoa, okay, I want to sell further. You should consider the buyback. Because that level, seemingly, it's a technical level that every time the markets rebound over there. All clear? All right. At the moment now, everybody clear yourself on this, on the Nasdaq and the forecast. Yeah, important, huh? Right, are you still around? If you're still around, please key the word Nasdaq, okay? If you're still around, please key the word Nasdaq. I want to see whether you guys are around. Okay. Okay, so Nasdaq 14,523 is a level to watch, huh? Okay, to watch, huh? All right, thank you guys. Like I told you, it's very, very boring to be talking like this and there's no response from you guys. All right, not very fun. Try talking to the mirror for 1 hour. You will feel that point yourself. Okay. All right, so thank you guys for responding. Thank you, Anthony, Fred, Janet, Eric, Louis, Allison. Appreciate that as well. Okay, Fred. Okay, let's continue. All right, so let's look at the Nasdaq today. Now, Nasdaq chart doesn't look that nice, and yeah, prolong and showcase the why today I fear for the Dow. Now, yesterday we have the CCYR on the Nasdaq, right? And the Nasdaq did try to recover initially, but once it failed to cross MLP, it came back down and closes near the low, right? Why is that so? Because the KSI will rate. So that's why the selling pressure is actually there. Now, the market today has rebounded, but I don't think it will stay up for long. So likely the Nasdaq, if later on come down again, right, it will go down to 14,531 again. So that's the reason why in my book itself, right, I really feel that we shouldn't be long any near term unless the Nasdaq go down deep, then you buy. If not, right, I think the Nasdaq will come down again later today. All right, 14,531. That's the level that I'm looking at the Nasdaq to go down later. Okay, S&P 500. Now S&P 500, you can see this. Beautiful, right? Beautiful. Yesterday the MLP was here at 43.71, and you look at the recap of yesterday S&P, you will see that beautifully. You can see, right? This is the MLP, right? Yesterday, and the S&P hit the beautiful 95% mark, hit there beautifully, and then recover beautifully, hit the MLP again, come down, try again, came down, try again, came down, and then go down. So again, this MLP, right, is so scary. You see that the accuracy is so incredible. I told you it's 43.71. It's a strong MLP level, and the market really follow. I mean, don't you find this really amazing? This MLP is really very amazing. It's a simple concept that take the opening price and the closing price divide by 2. A simple concept like this. But the reality of it, the accuracy is really amazing. I mean that how on earth can the market have such a concept that, you know, taking this on, and the market really follow through? And this is not the first time I'm talking about this, not the second time. This is like probably my 50, 100 times. So that's the reason why I have great respect for the MLP, and I tell you that MTrader herself also know MLP very, very closely. Okay, so with that itself, right, today, where's MLP? Now, today's MLP is somewhere around here, and again, wow, look at it. Again, look at it, as if that the market knows MLP actually exists in the chart. Look at it. Look at it now, everybody, take a look. This is a 15-minute chart of today. Look at it. Oh my goodness. How on earth the market know that there's MLP over here, and the market really stopped there and then pull back? Amazing, really insane, okay? All right, anyway, today now we can see that the MA30 is still forcing the market downwards, okay? You can see that the S&P is still being forced downwards. You can see, right? It just couldn't stay up. So for 3 days in a row, the market couldn't go up. So which means that, right, and now it's like going away from it. So this is not a healthy sign. When the market is moving away from the moving average itself, right, it's like basically telling you that, you know what, there's no more strength to go and test it again. It's going to go away. So my personal view is this, 43.45, right? That's the figure, okay? So I'm going to say this. If the S&P later on do go to 43.45 itself, right, I want everybody to do this. MLP, okay, S&P MLP is 43.45. Everybody, I want you to really remember this number, 43.45, 43.45, okay? I want you to really consider to watch S&P at this price. If S&P later go to 43.45 and cannot go higher, right, it will be a sell. Can you do that? All right. So later on, right, if S&P futures, CFD numbers hit 43.45, I want you guys to inform in the global group chat or any other Sun group chat so that we take notice of that. I kind of believe that 43.45 could be a very strong resistance for today. All right, 43.45. And this number, nice, by 40 also good. 43.45, ain't not bad. That's a good number. Okay, so I suspect that this will happen later on. Yeah, okay. Now, even it happened itself, right? There's a strong support here at 43.24 because it happened yesterday. But of course, if the market is so exactly usually, right, my belief that it will test again. And if it tests again, if it can't stay, then it will go down lower. So my view is this: if it cannot stay above the 95% level, then it may come down to this point, and that is 43.03. Okay, 43.03. Okay. All right, got the idea? Yeah. Thank you, Anthony. You're supporting the figure. Okay, good. 43.45. All right. All right. Let me just do myself a favor. I screenshot this also myself. All right. I screenshot this so that I can remember what to do today. I think this is my best feel for today. I think that if the market really go up, right, this will be my better feel that I think the market could be going. Yeah. Okay. Screenshot done. Okay. All right. Let's continue. All right, so that is the level to watch out for S&P 500. Let's look at S&P today. Now, the S&P 500 today, the KSI is green. Interesting. The KSI is actually green. Okay. Green KSI, but CCYR on the day chart. Oh, so another CCYR on the day chart. So another sell down potential. So same thing again. KSI is green, right? So I suspect that you go up first. But if it cannot stay up further and break below OP, right, then this will contribute to a sell already, right? And the sell should bring it down to somewhere around here, 43.11 level. So I suspect that in the morning session, there should be some recovery on the US equity market as usual. Then after that, it's sell, right? Maybe the afternoon session, then or evening session, then maybe the S&P may, on the US entire market may pull back a little bit. That's my personal suspect and what I think the market will be performing today. Yeah. Okay, so that is S&P 500. Let's look at DAX right now. Now, the DAX yesterday, brilliant. I told you, right, the DAX will likely rebound when it hit this point, 15,029, remember? I told you that if the DAX hit 15,029, DAX will recover. And truth be told, it really happened. It really happened. Oh my goodness. So again, all this tells you that you really need to know your technical well and you will know what to do. Okay, so my personal suspect is that because of the way it closes, all right, it may try to test later here itself, and this is the 95% marker, and that is 15,231, okay? Wow, okay, Eric, I just did the thing. Wow, today the day high S&P is 43.45 level. Wow, okay. All right, let's spend buy 40. Okay, now for me, I think the DAX will be likely going to test 15,231 today, in my opinion, if you're going to continue its recovery. But of course, with the US market coming off to the late part, right, the DAX may gap down first, then after that, the buying may come back in again. Okay, so my view is this: even if it goes up itself, right, the DAX should be limited at about 15,231. Yeah, I don't think that the market can go any higher than that itself for the time being because. Well, you can see pretty clear it is below the MA30 and it's also below the MA200. So these two factors here are actually death cross. So any recovery is more to a sell than a buy. Any recovery is more to a sell versus a buy. So that's my personal take on this here. Okay? Yeah, so take note of that. Huh? Okay. Some messages coming in again. Okay, all right. Okay, done. All right, so that's DAX. Okay, so I've covered, I didn't do NIKKEI, sorry. Sorry. Now, NIKKEI has pulled back this morning, went up to a high of 28,000 this morning. The MLP for NIKKEI today is about 28,307. This morning touches an MLP and pull back. Let's look at the chart, shall we? Okay, you can see that on yourself. You can see that initially this morning the Nikkei opens here, go down first very fast, then it rebounded strongly all the way to the MLP. MLP is here, okay? And then once hit MLP, what happened? It stalled there and then couldn't stay up, broke down and went back down again. So again, the MLP plays a big part. So that's why when the TWB basic is available, right, you guys will have a lot of fun trading the market. All this MLP, MA30, all are going to give you a very good entry level with you can consider using very low risk with high return. I will show you how it works, okay? You will definitely like it yourself, definitely like it, okay? Okay, so now let's look at the Nikkei today. Now, first of all, Nikkei is still below the MA30 and below MA200, so still pretty bad. The MLP is here, so I kind of suspect that the Nikkei will likely be pulling back down again. The Nikkei itself, right, if the Nasdaq come off, the Nikkei will likely come off. So I believe that it will come down to this point, and that's 27,883 level. Now, this is a BMB, right? So if the market really goes down, then it had to go down all the way to this point here. And this is the minus 1 times 1, and that's 26,995. Wow, that's a long drop here. So Well, so that is a level, but there is a very interesting technical point, and this technical point is 27,208. So the last time we remember we had the Nikkei lunch thingy, right? When the Nikkei came down here itself, we told you that it will come down here, and once after that it rebounded, and the Nikkei shoot up by almost 1,000 points after that. So again, this 27,208 is a very powerful level to watch out for. And if the Nikkei do come down to 27,208, will be the first level that it will touch. So I believe that it may create the 26,995 again. All right, if the Nikkei comes down, okay. All right, that's long term, and let's look at the Nikkei in terms of this. Now today Nikkei got no pivot. Today Nikkei got no pivot. No pivot means that use the OP as a guide. So above OP is a buy, below OP will be a sell. Now the KSI is green in color. That's why above OP, the buy side is stronger. And you look at the length of the tail, you can see that, yeah, it does prove that when it goes up above OP, right, the length is higher. All right. So of course, earlier I said the Nikkei had to come down to break OP first, then it come down to lower level. At the moment, now Nikkei is trading above OP, so we just leave it there. But if the Nikkei loses OP later on, then the selling should be coming in soon. Okay. All right, so that is the Nikkei, and I covered all the equity market. Now let's look at the commodities market right now. Gold. Oh wow. Okay, everybody, come on, listen up. Okay. Now, first of all, this is the MA 200 level. This one is the MA 30 level. Okay, so now everybody take a look. Okay, everybody take a look. Now, this is the MLP for today. Okay, MLP for today. And 1762 is the 50% Fibonacci figure. Let me just bring up again. Now, everybody take a look where the Fibo came in. Now, the Fibo that I used to draw, I used the low here. Everybody take a look. The low was used, the low I used here. And that is around February, March period. Okay, March period to be precise. All right, March 2020, that was where I used. Then after that, I used the highest point that was done during the August 2020 period. Okay, understand? And of course, the time gold from March to August, the entire period is only how many months? Less than 6 months. And 6 months, the gold from 1,450 shoot up all the way to 2074 range. Okay, so now that means that for gold to go up by $500, if we want to move like that itself, right, it's not that difficult. To move up $500 is not that difficult at all. Now, why do I talk about this? I want you to pay attention to details. I say again, I never do this analysis before that. It's all whatever is coming in my mind now. I'm sharing this with you. Now, do you take notice here? It's everybody. Now, Fibonacci, you know how to use, right? Okay. So this is point A, and this is point B, right? Okay, point A, point B. Now, when the market pulls back on the Fibo, we have 23.6, we have 38.2, we have 50%, we have 61.8. Okay, now everybody take a look. From point B, it came down all the way to the 61.8, which is a very powerful retracement point. And at point C is where it rebounded strongly all the way to this current trend line that I draw. Okay. Now, the thing is this, then after it pulled back down, you notice that this time now it come back down again to the 61.8, but this time it's a touch and go. And this time now is heavily resisted at the 38.2. Okay, you see that 38.2. And now it's basically bumping itself at the 50 area here. Okay, got idea now? The 50 area. So don't you realize that now the market is basically consolidating? This market now is really consolidating in this manner, like this 1, 2, 3, 4, 5. Okay, this is a very strong consolidating factor here, and you can see that it's actually now finding some room here. So all I can say is this: if the market, if the market can go up, if the market can go up from here to here, it's about $500. So what is stopping this guy to go up by also 500? So now you look at the maths here itself, the scary maths here. Currently now the gold is at 1760 level, 62 to make it easier for you. Now if you add another $500, that will give you 26212. Hey, not bad, right? My target itself is what figure again? My target is 2218. So that's the reason why, in my perspective, we are about the time to buy gold for a long run. Around there already. Just somewhere around there already. Okay? So in my books itself, right, I believe that gold is around there to buy. Yes. I believe that gold should be able to go up soon already. Yes. Now, of course, the technical part is there. The fundamental is against gold. That means that the fundamental says that if the dollar is to increase in value, then the gold price will go down, right? Yeah, indeed. The only fundamental that's against us right now is the dollar and the interest rate environment, the tapering and stuff like that. But technical, I say technically it's all right. We are around there already. So I'm very confident to tell you that I still stand on I still believe that by March, so I'm going to write it down as a statement now. Okay, I can write it down one. Okay. By March 2022, we should be able to see gold reaching 2218 level. Now at 1762. Okay, all right. So you can see that I don't really do this. If I show you this, means I got a bit of confidence in this whole point here as well. Okay, guys. So are you ready to buy some gold? All right. Now, of course, can it pull back? Of course, it can pull back. But you see, even if pull back itself, right, the downside element, the downside potential. Okay, hold on. There's something wrong with my screen here. The downside potential is only here, which is the 61.8. That's 1689. Okay, 1689 level. Can you understand? So the downside is only 1689. So as long as my current position of buying gold at 1762, example, right? My risk is here, yeah. My risk is here. As long as I get enough money to hold $100 downside, example, then I'm actually using $100 to make $500. Can you see my point? That means my risk on the downside is $100, all right, that I'm taking as a form of buffer, and I'm aiming for 500. So this bet is a worthy bet. That means that you take $100 risk versus a $500 gain, and this is going to be over a 6-month period. And of course, the ROI will be pretty good. It's 500%. Yeah, don't you find that it's pretty decent? All right. So guys, how many of you will be taking this trade in? That means that you really want to buy gold and just leave it there, don't move, don't bother until it hit 2218 by March 2022. Well, if you are going to do that, it's all right. Can you key this thing called 2218 me? All right. If you're going to do that with me, yeah. Yeah, if anyone going to do this with me, it's all right. We can consider doing that together. Okay, 2218 me. Okay. Yeah, I would just like to screenshot this also. Yeah, okay, all right. I'm gonna pump up this picture into the Go group chat so that y'all can see in the Go group chat already. Yeah. Okay, so Tomei, Loyan, Kenghua, Fred, Anthony, Louis, Allison. Okay, all right. Eric, Suzanne, Cheng Hui, Fred, myself. Okay, so all right. So guys, let's just consider that $100 risk. Of course, you must calculate how much it would cost you. Okay, so your lot size will play a big part. Later on, it's all right. In the Go group chat, I will do a simple calculation for you, and then you guys will consider on that. Okay, all right. Okay, so pretty cool. Okay, one simple chart draw so many artistic stuff here. Okay, weekly chart, let's take a look. Now, weekly chart also show the key element here. Can you see that? This is the weekly chart that I'm drawing right now. So obviously, weekly chart, the numbers are the same because I didn't change the point A to point B. But what you can see over here itself, right? The weekly chart shows the also clear cut that there is a bit of technical breaking out soon, right? This is the point, this is a technical thing I draw. We will break out back then the market broke down. Then after that, it become resistant. Then it tried to break up again. Then it failed again, and now we are. So it's a lot of movement along the trend line. So I suspect that this is the turning point that we're all waiting for. All right, I suspect that this is going to be the point that we're waiting for. So that's why, to me, as long as our stop loss is reasonable, we can accept the risk. Then of course we can look to buy gold for the upside. Okay. All right. So that is the gold chart that I want to share with you. So let's go today. So everybody take a look at gold today. All right, gold today is a CCRY. It's a CCRY on gold today. This is a single rate today, single rate. Okay, KSI is green, no blue bars. KCX recently is here. So all these constitute to a potential higher upside on gold today. All right, all these constitute to a buy on gold today. All right, so I'm not too sure, have you bought some gold? Definitely, I think it's a good time to buy some gold, right, in my opinion. Yeah, so for today itself, right, gold seems to be a good idea. Okay, gold seems to be a good idea to go long. Okay, all right. So that is what I need to share with you. Just a moment. Messages again coming in. Okay, so gold, if it's going to go up, the first resistance, as you know, is 1767. For TWB student, PTP student, you know that that's the TSCB level. TSCB level, right, it's a very strong level to watch out for. And this level actually came from some time ago already. And you can always see that whenever the market hit the 1767, it kind of formed a resistance. So 1767 has to be a level to break through. Once it break through 1767 convincingly, the next level it will go, there's a lot of KCB over here, multiple of them. Then of course today's target will be 1777. Yeah. Today's target will be 1777. Yeah. Okay. So if gold can maintain its upside, break through all the barriers, 1777 will be the target that I'm looking at for gold today. All right. So gold traders, kindly stand by. Now, but also flip note this out, right? The opening price is very near the P2. So if the gold goes down and break P2, below OP, below P2, it's a sell mark. But the thing is this, the KSI is green and no blue bar, right? Even the downside come in, I think the downside is kind of limited. Yeah. So overall itself, in my opinion, itself, right? Gold today is still a buy. Okay, it's still a buy. All right, do your own risk management. Okay. Now, how to do a risk management? It means your entry is here right now. Your stop loss should be placed here. This is your range. Okay. If you think that this range is too near, you put further away. You can put here. If you think that's still too far, too near, you put it somewhere near here. I can stop you. But don't forget, every time you come, if your range gets further away, your lot size gets smaller. Okay. This one you cannot run away from it. You cannot say that, oh, I want to buy the same size throughout. No, that's incorrect. Yeah, very important. Huh? Okay, silver. Now silver, I believe you can see all the long antenna everywhere show that silver is also waiting already. I believe that silver is also like gold waiting. Yeah, it's waiting for the big movement to come. And of course, the MA30 is beautiful. It has been resisting it all the way. You can take a look. Every time it hit the MA30, it always resisted it. So I also suspect that, right, silver is about there already. Now, I still have some silver. I've been keeping it for a few months already. I still think that silver is going to go up, but it's not going to be as crazy as gold, but good enough. 30% upside is decent. 30% upside is pretty decent. Okay, all right, so that is the gold and silver. Let's look at crude oil. Now for crude oil, you can take a look. For crude oil, it's coming down, and that's the reason why equity market is having a dampening power. Now today's MLP is somewhere near here, which the crude oil already touches it. So if crude oil comes down, naturally the equity market will also come down, right? So it's kind of expected for it to happen. But if the crude oil comes down to this point here, and that's about $75.50, that will be a very good time to buy some crude. I believe that crude will hit this point and go up again. And this time around, if it goes up, easily it'll be $83 already. Okay, so that is my view on crude oil in the coming weeks. Okay, weeks, not now. I think that if it come down to this point, it'll be a very good time to buy some crude. Okay. All right, so that is crude oil. Okay, let's look at the crude oil chart right now. Now, crude oil is interesting. Crude oil actually today is a CCRY. Okay, a CCRY on the day chart. Interesting. So with that itself, right, and the KSI green in color, it's more to the buy. So as long as crude oil is sorry, my bad. sorry. The chart didn't show up. Sorry. Okay, where's my down chart? Oh, okay, make mistake there. Haha, sorry. Okay, crude oil. Yeah, this is crude oil. This is correct one. Okay, crude oil. Now, crude oil today opening price is between the two pivot. Do not, crude oil is a DJDD today. So which means that today the crude oil should have a big movement today because yesterday was a doji. For crude oil itself, right, doji, the last time was here. Then we have one over here and one previously here, and then here. Yeah, correct. So basically, whenever there's a doji, the next day, yeah, a bit of directional movement, a bit, not a lot, a bit, but still there. Okay, so now crude oil, the KSI is definitely green, but because it's a doji yesterday, if it stay below OP, then the crude oil will stay down. But because of the downside, the KSI is green, right? I believe the downside will be limited. The downside will be limited. So I think 78.83 will be the first support here. Likely it may touch and rebound. Okay, so crude oil trader may want to watch. If you think that you go down lower, if you break below P2 and stay below OP, then of course my target is still the 75.50 area. That will be the level that I'm thinking that crude oil could be going down. But with the KSI green, it's going to be quite tough. Yeah, with KSI green, it's going to be quite tough. Okay, all right, so I covered all the commodities also at the same time. I covered the equity market, and the last two will be the Bitcoin and Ethereum. Let's take a look. Now, sorry. Here we go. Now, Bitcoin has strengthened its position again. It tries to go up again. Now, Bitcoin, there's a Fibonacci figure at 23.6, and that figure is 56,000, as I mentioned to you. This is the Fibo figure at 23.6. So as long as Bitcoin doesn't stay above 56,000, you also notice that when Bitcoin comes back down, right, gold goes up. So later on, if Bitcoin do go into some profit taking, right, then gold will likely be the one being pushed up already. But of course, Bitcoin at the moment now, the KSI is green and no blue bar shows that the downside is kind of limited. So what if, can we see a Bitcoin going up and the gold going up at the same time? It is possible if the market felt that there's time to move more funds to Bitcoin and gold at the same time, while removing away from the equity market, it is actually very possible. But 56,000 is now the stronghold against Bitcoin. And today's pivot one is 57,000, which I think that if the market hits 57, it's a good time to consider to sell the market. Okay, that is how I see for this Bitcoin. Now, last one will be Ethereum. Now, Ethereum, you can see it's not moving as fast and quick and aggressive as compared to Bitcoin. So for this Ethereum itself, right, at the moment now, the strong resistance is about 3,600 level. As long as the market doesn't cross 36, it's kind of flat. But because today opening price already above P1, right, above P1 is a buy. So above OP, above P1 is a buy. And the KSI is green and no blue bars, all tells you that the Ethereum has the higher chance of going higher. All right. So for us, for time being now, Ethereum is a stronger buy versus Ethereum for now. Yeah. But 3600 level will be the strong resistance that you can see over the last few days, sorry, the market just couldn't go past it. Okay. All right. What idea now? Okay. All right. So that is the Ethereum and completed today's MAO. All right. So today's MAO has been completed. I hope that you like my goal sharing, and I'll do the goal charting very soon. I hope you enjoy this session. I'll see you tomorrow, same time again for our MAO. All right. Thank you very much. Bye-bye.